All right, let's talk about AI. For the past couple of years, it's been the story in the financial markets, right? But looking ahead to 2026, well, something big is changing. We're leaving the hype train behind and stepping into a whole new era. This is an era where AI's impact isn't just some far off promise anymore. Nope, it's getting measured, line by line, right there on the corporate balance sheet. And this quote really says it all. In 2024, AI was a gamble. In 2026, it's a balance sheet. I mean, that just perfectly captures the huge shift we're all witnessing. We're moving away from just betting on potential, and now it's all about demanding proof, real profitable results. And believe me, that's changing absolutely everything about how money is moving in this new AI economy. So let's dive into this new reality, the AI balance sheet. What does that actually mean? Well, it means the age of just throwing money at anything that sounds like AI is pretty much over. Those days when a company could just slap AI on their pitch deck and get a blank check, yeah, they're gone. Now the market has this laser focus on real world stuff, tangible infrastructure, actual assets, and the big one, a clear return on investment. And you can really see the pivot right here. Back in 2024, it was all about the gamble, speculation, hype, and a big focus on software. The promise of what AI could do one day. But fast forward to 2026, and it's a completely different ballgame. With interest rates being what they are, everyone's getting a lot more disciplined. Now investors are looking at the balance sheet. They want profit, ROI, and their focus is shifting to hardware and energy. They're actually investing in the physical grid that powers the whole thing. It's a massive move from the virtual to the very, very tangible. Okay, so what's the engine behind all this? What's driving this huge shift in where the money is going? Well, economists and analysts have a name for it, the AI supercycle. Let's get into what that really means.
Here's the definition from folks like JP Morgan and the World Economic Forum. An AI supercycle is get this, a decade-long megatrend of massive investment in AI infrastructure. The key thing to get here is the timeline. This is not some short-lived tech bubble that's going to pop next year. No way. Experts see this as a foundational 10-year-plus trend. It's this sustained wave of cash pouring into the core guts of AI, and it's literally going to reshape the entire global economy.
And we are talking about serious money here, a ton of it. Just look at this chart. Companies are pouring absolutely record-breaking amounts of cash into capital expenditure, or CAPEX. You can see it just ramping up year over year. And this isn't just about cool new innovations. It's a full-on strategic race, especially between the US and China. In this race, nobody, and I mean nobody, can afford to hit the brakes. And this quote from Frank Lasalla, the CEO of the DTCC, just nails it. He says, AI is a megatrend that will occur over a supercycle. It's expected to last a decade or longer. See? This isn't just a fleeting trend. It's a supercycle, a long-term economic engine that's really just warming up. The money being spent right now, that's laying the foundation for the next 10 years of growth. Okay, but there's a consequence to all this, a big one. This supercycle of investment, it's not lifting all boats, not even close. In fact, it's doing the exact opposite. It's creating this deep and, frankly, accelerating divide right across the economy. We're seeing very clear winners and very clear losers.
JP Morgan's analysts have a term for this. They say, at the heart of our outlook is a multidimensional polarization. Now, that sounds a bit academic, right? But what it really means is that the AI boom isn't just about growth. It's about splitting the market and the economy apart in a bunch of different and, sometimes painful ways.
And this polarization is hitting us in three key ways. First, you see it in the stock market, right? The AI companies are just skyrocketing, while everyone else kind of gets left in the dust. Second, you see it in the wider economy. We've got this insane spending on tech, but at the same time, the job market feels, soft. And third, it's hitting households. There's this widening gap between what high-income and low-income folks can afford to spend. It's a classic K-shaped recovery. The top part of the K is going up, but the bottom part is going down. It's like two totally different economic realities happening at the same time. And here's a fascinating twist. It's not just the companies that are getting smarter. As Gartner points out here, the investors are changing too. They're starting to use their own AI tools to dig into these companies. What does that mean? It means they can ask way tougher questions and demand a whole new level of transparency. The pressure to prove you're delivering real value, it's now coming from every single direction. So with all this going on in this new polarized world, where is the smart money actually going? The old investment playbook is basically being torn up. The new one is all about focusing on the tangible stuff, the real assets that are the actual backbone of this AI revolution. And the new focus is crystal clear. Step 1, data centers. Think of them as the physical real estate of this whole digital world. It all starts there. Step 2, advanced memory. This is the super specialized hardware you absolutely need to run these giant, complex AI models. And step 3, something called agentic workflows. Now, that's a bit of a buzzword, but it basically means really smart AI software that can automate entire complex jobs, not just a few simple clicks. So who's winning in this new playbook? Well, it's probably not going to surprise you. We're looking at companies like NVIDIA, Amazon, and Microsoft. They're consistently getting these strong buy ratings from analysts. And why is that? It's because they absolutely dominate the key areas we just talked about. You've got NVIDIA's chips, which are the brains of the operation, and then Amazon and Microsoft with their ginormous cloud and data center empires, they own the infrastructure. Okay, so it's all about data centers and silicon chips, right? You'd think the whole story is just about tech stocks. But what if it's not? The ripples from this AI polarization are spreading out, and they're hitting some very, very unexpected parts of the market. Check this out. $58 an ounce. That's JP Morgan's price forecast for silver. Silver! So why on earth are we talking about silver in an AI explainer? Well, it's a direct consequence of that polarization we mentioned. See, as all this money floods into a few giant tech companies, investors start looking for value somewhere else. And silver gets a double win here. First, it's seen as a safe haven asset. And second, it's a critical industrial metal needed for the very electronics that are powering this whole tech boom. It's a perfect example of how these shifts are impacting the entire market. All right, let's wrap this up. Let's talk about your 2026 outlook. What's the big picture here? And what does it actually mean for you? Look, if you remember one thing from this, let it be this. AI is not just another niche tech sector anymore. That's a huge mistake. It has become a fundamental force of the economy. It's the thing that's steering trillions of dollars in capital, it's the thing creating that K-shaped division, and it's completely rewriting the rules of the market for the foreseeable future. But, and this is a big but, with all this opportunity, there is some serious risk. JP Morgan is still giving a 35% chance of a global recession in 2026. The whole thing is pretty fragile. The same forces that are creating these huge winners are also creating the losers, and the entire economy is walking this incredibly fine line between an AI-powered boon and a really broad slowdown. And that brings us right to the final question. As AI shifts from being a wild gamble to a hard line on the balance sheet, as it splits markets and picks new winners and losers, the most important question isn't about the market, it's about you. In this brand new AI economy, how are you going to find your edge?